Tech IPOs have dried up, and that could spell trouble for the whole industry. Just one tech company has gone public in the US so far this year. It's practically unprecedented. The fewest tech IPOs we've ever had in a single year was 6, in 2008 during the financial crisis. If this year keeps going as it has been, we could set a new record. People in Silicon Valley are starting to worry about the drop-off in tech IPOs. And here's why. Investors that bet on young companies rely on IPOs to make their money back. If they can't do that, they may stop writing checks to fund the next Google or Facebook. This is happening already. The amount of money invested in startups has fallen from a peak about 6 months ago. So why are we in this IPO desert? For one, about half the tech companies that went public in the US since 2010 are trading below their IPO price. Just look at Twitter or GoPro. It's hard to sell investors on new stocks when too many of them got burned betting on the last IPOs. And two, there's a big expectations gap. There are more than 150 unicorns, that's Silicon Valley jargon for a startup valued at $1 billion or more. Many of these companies would be worth far less if they tried to go public now. So many of them are waiting and waiting to try to improve their business and IPO at a higher price. These unicorns could be right to wait, or they could run out of money waiting for the perfect time to go public.